I want to introduce you to the Gold Fibonacci Reversal Trading System. Gold has been a very wild market. It's been very different in recent years, and I have a strategy that takes advantage of these swings using Fibonacci reversals. So let's go over the results. You see the results going back 7 months, and if you've been trading gold, you know it's just been absolutely crazy, much different. It's a much different market than most markets, and very difficult to trade. You see all these turning points, and I found a very simple strategy. The key is to find a simple strategy that works, and so I have found a very simple strategy, and it basically uses retracement reversals. Once the trend's one way, if it reverses a certain percentage the other way, you can see how that works. Let's go back here to this time frame. It holds positions overnight, and it can hold over the weekend. You can change some of the input settings to prevent that though. Last 7 months. Now this does not work. This works better in recent market conditions as this market becomes wilder and wilder. So let's go back to the beginning of the pandemic. So let's go to 3/23/2020. This is the day when Fed stimulus kicked in during the pandemic, and let's see what the results are there. So then, you know, it goes from 236 to 187 average trade profit, but still $96,950. This is with $25 round turn slippage and commission. This has a $1,000 stop loss, a $1,200 profit target, 84.80 drawdown. Here is the equity curve. Just a really nice equity curve. There's a lot of trades, so it has a short history, but it has a lot of trades. So you have some statistical significance based on the number of trades and the way this current market is working right now. Now let's go back a little bit further. Let's go back to the beginning of 2019. And we're going to see this in different stages. I'm telling you, before 2017, this strategy does not work. It's a downward equity curve, and I'm going to show you that in a moment. In full disclosure, the drawdown goes a little higher, 10,935, 133 average trade profit. At 158 before slippage and commission, $113,000. You see, it starts to pick up, and this pattern accelerates. And if you've been trading gold, you might have an idea that, yeah, I can see how this pattern would accelerate because this market is reversing more and more. It's very hard to trade using traditional trading methods. Markets don't usually act like this, and gold is extreme. Now let's go back to 2017. And so this goes in phases of acceleration, and 2017 is where the beginning of this pattern starts to work. So going back to 2017, 95.55 after 25 round turn slippage and commission, $120 before slippage and commission, 11,575 drawdown, 130,000. Now let's look at the equity curve. So you can see how it's done since the beginning of 2017. Kind of went sideways from June of 2018 until about September of 2019, and then it starts to accelerate again. So let's look at the difference between long and short trades. Pretty well balanced, favors the long side, 120 average trade profit on the long side. The number of trades is balanced, but there does a little better on the long side. So 83,430, 46,615 on the short side. And let's look at it before 2017. You'll see that this has a downward equity curve, and when you trade, you have to realize that if you want to find a good methodology to trade with, you have to find an inefficiency in the market, and then you have to trade that inefficiency while it lasts. And so this is an inefficiency in this market. I don't think a lot of people have locked into this. It's still very hard to trade, and so we're going to take advantage of this as long as it lasts. It's a new strategy for 2022. It's in our portfolio calculator, and we're going to wait for this to update. So testing this back to 2007 when these markets went electronic, you see there's 4,597 trades. It is net profitable with slippage and commission, 870 average trade profit, but $107,000 drawdown. Here is the equity curve. Not good to trade this before about 2017. Here's 2017 time frame. Starts to do well, starts to accelerate, accelerates even more. And so thing is, if you want to trade a strategy that trades frequently and trades the current gold market and trades the historical market. It's pretty tough to do. You could bias it by saying I'm going to trade what's worked the last 5 years. The beginning of 2017 is about 5 years ago. So that's what we're looking at. It's in this whole thing, this whole equity curve is in the portfolio calculator, and when you add it to the 200K portfolio, going back about 2012, it does not make the worst case drawdown worse until about 2011, and so then it goes into the worst case drawdown by about I believe 2 to 5K worse. But since 2012, this does not make the worst case drawdown in the 200K portfolio any worse. So it's a strategy. You could take a look at trading. You could take a look at the performance on any time frame. I always recommend waiting for a drawdown to get in. You can see some of the recent trades. I've tried to eliminate trades like this because I want reversals. This is a very raw strategy. I can't emphasize how simple this strategy is. And so sometimes it takes trades like this. You see the recent trade got short, got long, got short, got long. It's down right now. So the last few trades haven't done much, but you can see how it's done trading these kinds of markets. And after making this video, one of the things that comes to mind is, can I have slightly different parameters for the short side to improve it, instead of using the same parameters for the long side as the short side? And so that may be the next step on the research. I like to keep things simple. I like to keep things pure. We're using a 50% Fibonacci retracement. Typical Fibonacci retracement is 38.2. 38.2. I'm going to show you the inputs here actually. 38.2 and 61.8, but 50% is also used. And so I'm going to show you the inputs now. So here are the inputs. It starts between 7 a.m. and 13:30 p.m. Eastern Standard Time to take entries. It looks for an uptrend, and then if it reverses 50%, you can optimize that or play with that number if you want, and see if you have a better number. 53, I think, worked pretty well. And then the L1 is based on how far back we're looking on for the trend. 110 5-minute bars. You can use numbers close to that. Stop loss, pretty good numbers for gold. You might want to trade this with micros as well. You can add a day trade exit if you want. It uses a Friday exit. It exits Friday at 16:55. Otherwise, it just holds trades overnight. These markets are only closed an hour a day, so there's not a huge time period. Anything could happen during that 1 hour closing period. So you could test a day trade exit, or you could manually exit and get back in. Not a lot usually happens. So that is gold reversal, gold Fibonacci reversal 2022, and it's a brand new strategy that takes advantage of the wild moves in the gold futures market.